Alright, so in this video we're going to talk about the failed reaction on a live chart example. As you can see over here in front of us, we have two trades that we've taken in the live charts, and these are real trades that we've taken in the markets. As you see over here, I want to show you something. Alright, when prices are going bullish here, alright, we've been able to target this high, this supply area in the markets here, this major supply area. Once the market has touched our major supply area, what we were wanting to see here, obviously, the first thing was the hint was the change of character. Okay, so we had that change of character show first, which is right here. There was your high, there was your low, right there. So now that we find out our change of character, we were very patient on knowing what was happening in this market. Once we see that change of character, we then start to look for our failed reaction, if there's a failed reaction present at this time, right? Notice again, we had a high broken, then the low broken second, all right? In order for us to look for sells, we need the high to be broken first and the low to be broken second, okay? This is for selling only, all right? Now notice again, when price broke structure, we wanted price to retrace. Where do we want price to trace? Back at this last failed reaction attempt, this last buying that price, all the buyers were trying to go bullish to break a new high, but they failed to break a new high, right? They failed to do so. So instead, price reversed, taking a dump and then taking a break right below our last higher low right over here, making a break of structure, okay, with a full body close below this low, okay, before our previous low here. So now this is the new low, okay, of this market. This is the new lower low, all right, and this would be deemed as the new lower high, okay, so lower high, lower low, all right. A lot of us may think, well, hey, you know, what about this area here? Doesn't this count as an area of an interest, you know, a point of interest? Well, yes, it does, but in this case, if you're seeing the substructure and minus structure forming, you can tell that this isn't really the area where price is going to go, because that's not where the last high that was created if you're looking at substructure and minus structure. Notice where we had our blue dots from here. We had our low, we had our high, we had our low, we had our high, okay? And price came all the way down, pulled back, tried to push price to the upside, then failed. So this is very important for us to understand. Okay, well, now we know that price was able to violate this low. All right, this high had no importance. This little high here had no importance of playing a role in this break of structure. Now, what do I mean by that? Well, if you can see here, when prices start switching now from here, breaking this new low. Now we consider this area here is the new part of structure. From this low being broken, this is where price, from this high to this low, this is a range from this high to this low. This is our new area that we're playing with, because this high was not able to break that new high here. Therefore, we have a weak high here. This is a weak high, and this is this is a strong high here, and this is a weak low, okay? This is a weak low, and this is a strong high. Now, why is it a weak high? And why is it why is it a strong low and a weak high? Again, why is it a weak low and a strong high here? Well, that's because this low here wasn't able to break a new high here. Okay, and this high here was able to break this new low. So we have a strong high over here. Okay, that was able to break this low. Therefore, this was the last up move here before prices were able to go and take prices. Excuse me, having an alert on gold there. Yeah. So this high here wasn't able to take this high, right? It wasn't able to take it. So instead, it failed. So now this is where all the last buyers were before prices went to the downside. So then what we did was, obviously, we looked for prices to retrace back to this last candle here. All right, price created an inducement here, and then price was able to take prices the market was able to take price even lower from there. All right, that's how we were be able to anticipate the markets. Okay, now notice over here, once we sniped, prices going down, bearish, 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 right? Now notice over here, what do you call this? All right, prices were trying to go high here, okay? Prices were successful breaking a new high. Prices retraced. You can see that bulls were trying to push price high, but then price flipped again. So you can see this, there's another flip happening right here. All right, and there's where you strike. Okay, now I want to tell you guys that failed reactions are part of a continuation of the extension in the market. All right, what do I mean by this again? Failed reactions are a continuation of the whole extension of the markets. Okay, so essentially, when prices break in like this, right, we have a break of structure. This is the continuation in the market, right? You don't need to use trend lines, obviously, but what I mean by this is that prices will continue low based off of a failed reaction. If you look at this example here, and you're like, okay, well, price retraced and then took out this liquidity, right, and then mitigated this high over here, and price went low, which is very true, right? But the only thing that's very interesting about this is that this is our new high now, right? This is not, the failed reaction does not add a new high into our trading. It's just continuing the extension of that previous high. We had that high here create. Prices flipped here. We saw that failed reaction here. Right there. Let me make it a little more clear for you all here. Right there, we had that flip, that failed reaction. So now this is what we would consider an area where we can continue to look for sells, you know, like right there, right? Continue to look to target this high here because this is where the last buyers were, prices broke, price retraced, and this is where we could sold again. But this is like I said, this is a continuation of this previous high. So that's all the failed reactions are good for. Okay, we can't anticipate that the markets will continue all the way bearish down here based off of this failed reaction. All right, I'm sorry, based off of this failed reaction. Okay, so prices retrace back, reset a whole new high, taking out the liquidity here and mitigated this order block here. And now we can look for prices to go lower. Now, that's how these failed reactions work. Now let's look in closer here. All right, notice again here we had a high, we had a low. Okay, we had a high, we had a low. Okay, this low wasn't able to break this high. Prices went down, retraced, took out this liquidity, mitigated this order block over here, and took prices even lower. Okay, but now let's take this whole thing as let's zoom out and look at this as a whole. Here's our low, and here's this low. Notice how we mark this failed reaction right here. Okay, this low didn't break this low. Therefore, this whole piece of information here is the last up move because this low was not able to break this high. Okay, so we have, this is our last failed reaction right here. Our last failed reaction that tried to go bullish, but then instead it went bearish. And if you look to your right here, notice where our entry is, right? Notice where this part right here, if you just look to your left, notice where it wicked right there. Because now we had bullish buyers going up, bears took price down bearishly, obviously, and then price comes back to mitigate the last bullish move. All right, before bears went down. So this is how you can anticipate and look for potential entries in the market. You can also see and specify that we had a change of character that happened here. Let's make this a little bit better for you guys. I want this to be really neat. Right there, we had the change of character from there, from that high to this low. Alright, right there. Let's make it better. Right there. Okay, now why is this a change of character? You can see that We mitigated this high area, prices started to reverse. We had this high broken first, then this low broken second here. Okay, this low was broken by this move down here. So now we need to be patient and wait for price to come back to mitigate this whole up move that was trying to push bullish, but it failed to break that high. Instead of price break bearish, mitigated, and we look for that sell. Okay, this happens time and time and time again, over and over and over. It does not get old. It does get old because it's the same thing over and over and over. If you look at this example here, we were going bearish, price went bearish, price retraced. This looks rather like a break and retest trade. You can see all the break and retest traders try to sell. Then all the liquidity was taken out here by this one single move over here. Right there. Okay. Took out the liquidity and pushed price low. Now I want you to see this carefully. Look what happened. We had a change of character. Again, look at this last candle here. That's considered a failed reaction. Okay? Prices tried to push the market higher, but it wasn't able to do so. It failed, right? It failed to break this high. Price broke below, came back, and obviously, lo and behold, we had a area to look for entries right there. You can snipe right there and take a sell, right? It's very simple, very easy to find. These patterns are undeniably consistent and always profitable, very easy to find the markets. If you can find these, if you can see how these work, this is how it all works. Now, one last thing I wanted to mention is whenever you're looking for a failed reaction, they typically happen when there's a change of character, okay? When there's that pivot supply or pivot demand happening in the markets, okay? In this case, this is a pivot. Okay, we consider this a pivot because price is consolidating, and then price broke above, then price broke below. It's pivoting from one side to the other. Okay, so think about it. If you're holding 1 foot on the floor and moving your, 1 foot on the floor, right, and then your right foot here, let's say you're holding your left foot here, and your right foot is right here, and then you're just twisting. You're holding your left foot, but you're twisting your right foot the whole time, circling around, okay? That's what a pivot is, okay? So this whole left foot stays in place, but the right foot continues to push, turn around and around. Let's say you're playing basketball, you're holding that basketball, and you're pivoting, to either to the left, or you can also pivot to the right. To the left here, and then to the right this way, right? Okay. So that's why this is happening here. Like this place stays in one place. It's pivoting to the left, and then all of a sudden pivots to the left and pivots to the right. Right? It's just pivoting. So this is why this is our supply, pivot supply, right? And there's our failed reaction, and there's that reaction that happened in the market. Snipe away, and boom, you make that money in the market. All right, so that was the bearish side, right? These you can spot them everywhere, obviously. Let's look here a little bit closer. Like I said, this only happens in pivot supply and demand zones. If you look at here, we have an area where price broke below and price broke above, right there. Let's be a little more descriptive about this, be a little more detailed. All right here. Okay. Now you might ask yourself, where's the pivot, right? Or where's the failed reaction? Well, the failed reaction is right here, this whole area right here. Now you can see that the failed reaction didn't get tapped in just yet. Well, that's no problem because sometimes they don't happen, right? But we always need to be prepared for them. And notice right here when I drag this whole demand zone here, notice what we get. We get a reaction right there. We get a nice reaction, price retraces. Okay, there's no knowing that price was going to go extend from here until price actually gives us that beautiful change of character, breaking above this low. Breaking above this high like this, right? We had that low, that high, right? maybe if we had a failed reaction here, like this, and price breaks above, now we have a new failed reaction. We have this as a failed reaction. We can wait and anticipate for the markets to get back, and then to strike there to look for buying opportunities, like this. Okay? Failed reaction, again, is very simple and very easy to see in the markets. You just need to wait and anticipate for them to come to you. All right, as we see here, we have another break of structure to the downside and another break of structure to the upside. This is a change of character. If we look at this very closely, I want you to see we had an area where price goes up. It doesn't break anything. It doesn't break structure. Then retraces, and price breaks up again. This doesn't do anything until this last low here does something. You can see that here was the actual area, the failed reaction right there. This was the last low before the break of structure, right? This was the last low that was attempted to go down. Or you can easily tell yourself, okay, well, yeah, sorry, that was it. That was it. What am I saying? There we go, right? And notice how price continues to the upside. We had that last low that was trying to go bearish, but instead went bullish. And there's your flip. This is your flip. Supply to demand zone. So we would say this. We do this. Change of character like this to the upside, downside. Right there. Right there. Okay? And our failed reaction would be considered to be this. Right there. Okay, so that's a failed reaction right there. Price breaks, doesn't tap the failed reaction right away, as you see, creates more inducement in liquidity right there. All right, comes into our failed reaction, and obviously this would have been a great area to look for buys. And you know, you can close your eyes doing this one actually. Always put your risk a little bit below our intended, you know, zone, this zone right here, for safekeeping obviously, and then look to target your highs like that, right? So that's what it is. Okay, notice over here again. We didn't have a clean, oh, actually we did. No, we didn't. Okay. This would be our failed reaction at the end, okay, because you can see we had a low broken here, a high broken here, okay, but the market never came and tested this area. So sometimes it happens, sometimes it doesn't. But this was the last failed reaction where price tried to break below, but actually wasn't successful, and price pushed up. Okay, came back down, and then continued this to the upside. Okay, eventually price will get there and either mitigate and or yeah, like right here actually, right there. Prices mitigated this low here that you see, and then took prices higher, right? So this would be a very important area because this was our last low before the high had happened. We had a change of character again, as you see, right here and here. So this would be very important for us to understand that this was the last low. Okay, if you wanted to take advantage of this high, of this trade here, you might have wanted to wait for a complete break of structure to the upside right here. Now you have an area where price broke structure here, okay, but never tested. So we would count this as our failed reaction. Then price paused in the market, price broke a new high. So we have two new highs that prices pushed bullish, right? And in order to see who was responsible for this break structure, well, it was this candle right here, and it was this pullback retracement here. Okay, so this is where your entry would be based off of this pullback in the market right there, because this candle was responsible for this high, this break. So we would look for entries right here. Okay. All right. I think that is it for that one. Okay, we did these. Maybe one more example to show you guys the failed reaction again in action. Right here we don't see any failed reactions. Yes, we do. Sorry. Yes, we do. Let's do it here. We have a high. Okay, in order to see a failed reaction, what do we need to do first? We need to see a change of character, break to the upside like this, and break to the downside like this. You can see the last attempt to sell was right here. All right, there were sellers that tried to sell. This the sellers were not successful to break this low. Instead, price reversed, going to the upside like this. Broke a new high, so this is your last failed reaction right here. This whole information right here. Let's highlight this right here. See, this area here was an area that failed to break this low here, and instead price broke to the upside, going up like this, came and mitigated this last area of supply, and there's your area of striking to snipe. And then obviously you can go for days and days doing this, right? Because it's just the same old move. Again, this happened at a change of character, at a chalk. Okay? At a chalk. Always look for the chalks in order to look for those failed reactions, in order to take advantage of the continuation in the market. Notice how I said continuation and not a full retracement down to an area here, to an area where a deep pullback, a deep supply, a deep demand area, right? For prices to continue to the upside. Okay, only because we know this was a failed attempt to break this low. All right, it's just a continuation in the market. Okay, and once we take that continuation, we can now fully reset and wait for prices to pull back and continue, and then we can wait for another potential failed reaction right over here that we see, right? And look to take a new high. But in this case, this one didn't mitigate here. It mitigated here a while ago, right over there. Okay, so guys, that's how it's done. That's how failed reactions work in the market. I hope this video was helpful. I really want you to back test this. All right, back test. Look at every chalks in the market. A failed reaction is just a continuation of that current high or current low. It's just an extension of that current high or current low. All right, and it's that last move in the market that either failed to break a new high or failed to break a new low in the market. The failed reaction would be perfect, a good combination to use for entry models, for you to look for perfect entries in the market, combining them with chalks in the market. All right, and that's it for this video. So I will see you guys in the next.